Welcome back to another video. Soil here, and today we're going to talk about two main categories of short-term trading, which are scalping and day trading. First, we're going to see what each of these trading methods mean and how they differ from each other, and then we'll explore the pros and cons of these trading approaches to see which one is better. Stay tuned and let's get started. Alright, let's begin with scalping. Scalping is a trading technique for placing very short-term trades which last somewhere between a few seconds to several minutes. A scalper can also hold positions up to hours depending on his or her decision for staying longer based on the situation of the market, but generally in scalping, the trader focuses on very short-term volatility for making quick profit. It's a kind of in and out operation. Scalpers could place dozens or even hundreds of trades in a single day, and the goal is to collect many small profits that add up to something considerable over time. Scalpers rely on very short-term volatility and momentum for taking their trading decisions, and timing is extremely important in scalping, so they focus on very low time frames on the charts, usually between 1 minute and 5 minutes. Scalpers also use tech charts to evaluate the market based on the amount of transactions independent of time intervals, and they also use order books to see even more information about the market and price momentum. Alright, now let's see what are the advantages of scalping. In scalping, you don't need to spend lots of time for analyzing the market for every trade. You develop a trading strategy. It's usually an indicator-based system, usually one or two indicators mixed with price action analysis concepts that generates straightforward signals. The strategy is backtested, the win rate is already established, and the stop loss and profit target are predetermined before any trade, and all you do is to buy when you have buy signal and sell when you have sell signal without any further research or analyzing the market. In scalping, it's easy to reach to profit target because the target is set very small and the price movement in such a narrow range is very probable to happen. And pay attention that on the other hand, your stop loss is also in danger of getting hit, but with a proper risk to reward ratio, you'll be in profit in long run without any problem. Scalping strategies are also less capital intensive because you trade more frequently and in more different markets but in smaller size, so you use less capital per trade and you expect just very small profit from every trade. And because of this, scalpers have also less exposure to the market, so limiting their risk. And disadvantages of scalping: as I said earlier, scalpers place many orders and this causes higher sums of trading fees, and also because scalpers place many orders, it can cause errors and mistakes, so the scalper needs to spend more time and attention to actively managing trades. And scalping is not suited for beginners, and experienced traders may find more success with scalping because speed and timing is extremely important in scalping. Now let's talk about day trading. Generally, a day trader is someone who doesn't hold their positions overnight. The amount of time that day traders hold their positions actually depends on how quickly the price reaches their profit target, and in practice this can happen anywhere from a few minutes to many hours, but generally they don't keep their positions open for longer than several hours and always exit their positions at the end of the day, so their positions last maximally to a single day, and they usually use time frames from 5 minutes to 4 hours. Unlike scalpers who open dozens of trades each day, day traders place a few trades per day. They wait for the best trade opportunities to take, and even if there isn't any good opportunities, they may not open any position in a day. In compared to scalping, day traders use more tools and do more analysis for taking their trading decisions, but similar to scalpers, they also have strict rules for opening and closing positions and the amount of orders. So here also a day trader develops strategies and backtest them. The win rate is already established, the stop loss and profit target are predetermined before any trade, but as I said, day traders do more analysis and research and they seek out larger swings and trends to find the best trading opportunities. Advantages of day trading: as I explained, day traders take less trade, but the ones with more analysis and research, so this helps them make more confidence with each trade, and this has positive effect under emotion control because day traders take less trade and they wait until a valid setup appears. So unlike scalpers, they have less obligations on monitoring and managing their positions. And also due to the low number of trades, they pay less trading fees and they can show more flexibility with fees and commissions when choosing a broker or trading exchanges. But for scalpers, because of the high numbers of trades they take each day, trading fees and commissions are a big deal for them. And disadvantages of day trading in compared to scalping: day trading strategies target profits on distant prices, and because of this there is higher chance of failure because the situation of the market may suddenly change. And because of the distant target, while day traders are waiting for the price to reach the target, there is a chance for drawdown. By watching the positions for hours and all the fluctuations in the market, they may panic and close their positions too early because they're afraid of being negative on the trade. By doing this, they take a small profit and they actually turn into a scalper, but with smaller number of trades per day. And finally, the trader ends up being a low frequency and low profit trader. And day trading is also not recommended for beginners, and being consistently profitable in day trading demands experience and lots of study and practice. Until now, you learn what scalping and day trading are, how they differ from each other, and the pros and cons of these trading approaches. If you want to know which one is the right method for you, the only way is to test both of them, and by considering the pros and cons of each method, determine which trading style is more effective and profitable for you. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you found any value in this video, please like it, please subscribe to my channel if you haven't already, and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.